Alright, listen carefully. Today I'm going to show you how I trade gold when it's in accumulation, using a bullish triangle, internal break of structure, and a sniper order block entry. Trust me, this is not the breakout strategy everyone on YouTube teaches. This is patience. This is structure. This is risk management. Let me build one specifically for you. Most traders lose money trading gold breakouts, and it's not because the setup is bad, it's because they enter too early. This exact bullish triangle trapped breakout buyers, but it gave a clean 1-to-7 risk to reward entry. The secret wasn't the breakout, it was the internal break of structure and the order block inside accumulation. Watch this carefully. Before we start, make sure you subscribe to the channel. I post clean breakdowns like this to help you understand how price actually moves. Now let's get into it. Let's break it down step by step. We are on gold, 15-minute time frame. First thing I want you to notice, gold is not trending aggressively at the beginning. It's compressing. Price is forming higher lows, but reacting around the same resistance level. That right there is a classic bullish triangle. Now what does that mean in simple terms? It means buyers are slowly stepping in. Every dip gets bought higher than the previous one, but sellers are still defending one key area. So what's happening? Pressure is building. Think of it like a spring being compressed. And when that spring releases, the move is explosive. But here's where most beginners make a mistake. They see the triangle, they draw the lines, and they place a breakout buy stop above resistance. And guess what happens? Fake breakout. Stop hunt. Price comes back inside. That's not what we do. We wait for confirmation. Now pay attention to this part. Before the breakout, price creates inducement. What is inducement? It's when the market gives traders a safe-looking entry, just before moving in the real direction. You'll often see small pullbacks, equal lows, or tiny liquidity zones forming inside the structure. Now the key moment. We wait for internal break of structure on the 15-minute time frame. Not just a wick, not just a small push, a clean break. A candle that closes strong above internal resistance. That tells us something important. Buyers are no longer just defending, they're attacking. That internal BOS is the first confirmation that gold wants to break out of accumulation. But we still don't chase. This is where patience pays. After the BOS, price usually pulls back. Why? Because institutions need liquidity to load more buy positions, and that pullback often returns to the base of the impulse. That base is your order block. That's your point of interest. And here's the precision part of the strategy. We place a buy limit at the order block. Not randomly. Below the inducement that was created during the move. Why below inducement? Because if price comes back that deep, it can sweep weak hands before continuing higher. And that gives us better entry, tighter stop, bigger risk rewards. Now let's talk about risk management. Stop loss goes below the order block structure. Clear invalidation. If price breaks below that, the idea is wrong. Simple, no emotions. But there is one rule you cannot ignore. Direction must follow the higher time frame. Before taking this trade, always check 4 hours. If 4 hours is bullish, higher highs and higher lows, then this setup has alignment. If 4 hours is bearish and you try to buy just because you see a triangle, you're fighting bigger money, and that's dangerous. Multi-time frame alignment increases probability. Now, let me simplify the full model for beginners. Step 1. Identify accumulation forming a bullish triangle. Step 2. Wait for internal 15-minute break of structure. Step 3. Identify inducement created during the move. Step 4. Mark the order block at the base of the impulse. Step 5. Place buy limit at the order block. Step 6. Stop below structure. Step 7. Target minimum 5 risk to rewards. Step 8. Confirm 4 hours trend is bullish. No chasing, no emotional entries, just structure and patience. And here's something important. You don't need to trade every triangle. You don't need to trade every breakout. You only trade when structure, liquidity, and higher time frame align. That's how you survive long term. Gold rewards discipline. It punishes impatience. And if you master this accumulation breakout model, you'll start seeing opportunities most traders ignore. Now I want you to go back to your charts. Find one triangle. Wait for internal break of structure. Mark the order block and watch how price reacts. Don't rush it. Study it. Replay it. That's how skill builds. If this breakdown helped you understand accumulation and order block entries better, drop a comment and tell me, do you trade breakouts or do you wait for pullbacks? And if you want more breakdowns like this, make sure you subscribe. We're just getting started. Let's catch smart money moves. And if you want daily setups, live trade ideas, and more SMC education, join my private Telegram community. The link is in the description.